Good morning, everyone, and happy Thursday. Hope everyone is getting ready for the Halloween season. I find myself kind of watching more spooky movies as Halloween turns around, but I'm excited to share kind of some things that viewers have asked of me. Most importantly, was one asked, "What is going on with UK?" And that is actually a great topic to talk about, and it can relate into our economy as well. So, those who do not know, UK had a new prime minister after Boris Johnson left, and her name was Liz Truss. So, Liz Truss was a very only in there for about maybe a month, 2 months after she had some drastic economic policies that she wanted to implement collapse in her face. One of those policies was just slashing taxes, and basically, the market got freaked out by this. One, because when we think about a government, let's think about it from a business standpoint. Let's say the United Kingdom issues debt. Think about a corporate bond, but this time it's government bond. And when they issue that, it's relied upon taxpayers paying the government back, and that's their source of revenue. Well, Liz Truss was like, no to the revenue. We're slashing taxes. So we saw the UK gilt, which is what we're looking at right now, rise at its fastest pace in history. Now, keep in mind, they were facing high inflation as well, and drastically, what happened as soon as she made these statements, it just piled on and created a domino effect. So after these statements were said by Liz Truss, we saw the actually 10-year government bonds in UK, the rates raised to their highest rates in almost 10 decades. Kind of crazy to see. Okay. But oh my God, who cares? Why is this important? Well, we got to think about the pension funds in the UK. So remember my last video, I talked about how certain banks have to have a certain amount of reserves or risk-free assets. In this case, if I'm a United Kingdom pension fund, I have to hold a certain amount of UK debt, or it's called a gilt. And so I hold trillions, millions of dollars, and then I also have a position in equities, stocks, yada, yada, yada. Well, as soon as Liz Truss made these policies, the market actually sold all its debt, and it created the fastest, average rate in a couple of years. So we see right now, this was when Liz Truss mentioned, the tax, and then all of a sudden we saw rates skyrocket. Because remember, when I sell a bond, rates go up. When I buy a bond, rates go down. So the pension funds were losing tons of money off of these rates going up because bond prices are coming down. So they were getting margin calls. They had to sell some of their equity positions and increase their bond positions. And that's where we saw turmoil in the UK pension fund system. So we actually did see an intervention from the European Central Bank. They actually stepped in and bought back some bonds, and that's why we see, we were at all times high back in October. This is when drastically when it was happening. We also saw Credit Suisse pension fund completely collapse, loss of $5 billion right there, just basically off of these domino effects. So right now, this is the intervention you see right here is from the European Central Bank buying back their bonds, similar to what we do in the United States, which is quantitative easing. So they're still in the process of that. But now, as of this week, we have a new prime minister in the office, and his name is Rashid. Rishi is the new prime minister. He spoke, met the king because the queen's unfortunately passed, and the market seemed to be a little bit more happy. I would say calmer. He gave a really calming effect. Um, so that was good to see. So we'll see how he does. And basically, he knows that he got handed a loaded diaper, basically, and so he is going to try to keep the market calm. Also, from our neighbors up above, we also see a crucial policy shift. So the Bank of Canada also was feeling inflation. They slowed by they basically were going to have a 75 basis point rate hike as of this week. They actually lowered it to a half a basis point rate hike, so they slowed it down. And we see it. We're seeing a pivot across all central banks. We saw it in the UK. Now we're seeing it in Canada. Now the question is the United States going to pivot? Well, I happen to believe that they will. It's just because they raised rates at an unprecedented amount we've ever seen in history. So on that term, maybe some good aspects. Their fear of the recession. We see Canada doing, we saw UK do it. So we'll see back home if they stay the same. I also wanted to touch base upon kind of the US economy right now. And most importantly, I wanted to deal with it in a graphical sense. So I'm going to share my screen, and this is a Bloomberg article that I pulled up. Um, what I want you to notice is has to do with used cars and loans and automobile loans. So as you can see, back in 2009 during the financial crisis, price of cars and depreciation of cars were at its lowest. As you see from the stimulus that has been created due to COVID, used car prices shot back up. But now we get an issue from Wells Fargo saying there's something fishy going on. And they said, used cars prices slumped 7% in the third quarter, the worst decline since the depths of the global financial crisis, according to the data. Compiled by vehicle auction company Manheim, the risk investors fears the consumers end up owing more than their cars are worth. So that is a real key takeaway right here. So basically, what has happened is that when the consumer bought used cars last year and the year before, the prices were so high. Now, what's happening is we see used car prices come way down. Like, look at the chart; it's coming down. It's probably going to go back to its average. What they're going to be, the consumer's going to be underwater, and they're probably going to end up stop making payments. So, what does that have to do with our global economy? What is going to happen if people start making payments? Well, we're going to see either small banks start to lose a lot of money. We're going to see anything that is an asset-backed security have a lot of risk to it. So here's a clip in that I also want to show, and it's basically saying that asset-backed securities can get clobbered during the economic downturn as consumers get laid off and default on their debt. This is what we could be seeing right now in the used car prices. During the financial crisis, the securities got hit particularly hard as the housing bubble popped and bonds tied to debt, including second mortgage and home equity loans, headed south. What is that entailing? Is that we might see a shift from the consumer from paying their mortgage versus to paying their car. Back in 2008, the consumer realized that if they defaulted on their car, they weren't going to take it as quick away as they would from the house. So right now we're seeing all these kind of bad loans starting to come arise, and that is presenting real big financial risk. So it's given us similarities to 2008. I myself personally believe we are in a recession, and I want to show it on my next graph, which is unemployment claims versus the Wilshire 5000. If you're not familiar, it's just a stock index, small companies, small businesses, which is really important to know. So in our red, we have our Wilshire 5000 index, and keep in mind this is inversed. So when this is going up, that means it's going down. The index is going down. Whereas this is just on the unemployment claims. As you can see, in 2020, lockdown unemployment skyrocketed. Right now, there's two common trends that is arising. One, as this Wilshire index starts to decrease in price, we are seeing the unemployment claims start to rise as well. So that is worrying, but it is part of the Fed's arsenal to lower the inflation in this company in country by reducing the amount of people at work. Because remember, more velocity of money circulating in the economy is going to increase inflation. So I believe, we are truly in for some, really dark and stormy seas ahead. All the flags are pointing in that direction. And then it's important, as people know, being financially responsible. This is areas where we have to understand exactly what we're doing, how we're saving money. Because right now we are seeing just the tip of the iceberg of economic concerns arise, and the interest rates and all that stuff. So if there is some good notes on this Thursday podcast thing, and that's is if you're looking for to buy a car, let's just keep waiting. Maybe we go back to the average. You saw how fast those car prices went up, and hopefully they'll come back down. But also is just sending shockwaves throughout the economy. And I just want people to keep their head on a swivel, be cautious of what's coming, and who knows? Hopefully, you don't end up on the bad side of it. But as always, thank you so much for watching these videos. I love doing them. I love sharing them. I think it's important that as us consumers and people, we understand what's going on in the economy because this is vitally important. And in the coming 12 months, I believe a lot of people will feel the oncoming recession. A lot of people be getting laid off. I mean, I know Elon Musk just laid off 75% of Twitter staff. He's not doing that for certain reasons, but he's aware of stuff. So that being said, have a lovely Thursday, and hopefully you find these informative. And if anyone has any questions or wants me to talk about something, I'd be happy to do so. As always, happy Thursday and take care.